Bitcoin is on the move again and testing the boundaries and the resistance levels as we head into the weekend. So what is going on with Bitcoin? What is driving some of this movement? So one of the things, and we kind of talked about it yesterday in yesterday's video, is that Bitcoin is now largely correlated to the markets. And it is 4 o'clock on Friday. The markets just closed, and the Dow Jones was down 500, S&P down 55, NASDAQ down 130. Everything is down in the markets. These are not large percentage moves, but point moves. It's only a couple of percent, 1.5 to 1.33%, 1% in NASDAQ. And this is largely a reflection of the Fed's meeting. So the Fed came out yesterday and said, yep, we have inflation. It was higher than what we were anticipating. We think it's transitory and will reduce to normal levels. And they didn't say anything other than we're not going to raise interest rates till maybe 2023, when they were originally talking about 2024 or later. They didn't say anything about reducing the monetary policy and the amount of liquidity being pumped into the market, their bond purchase program. So they didn't give any indication that they're going to stop that anytime soon and taper, or that they're going to raise rates anytime soon. But then one of the federal bankers came out today, Jim Bullard, as you can see right here, and said he sees the first interest rate hike coming as soon as 2022. And I have a friendly wager that we're going to see rates raised a little bit before the end of this year, because inflation, as you know, is real. It's here to stay, and it's global. We are a global macro economy. All the markets are tied together. They're all correlated. Markets across the world will be selling off a little bit, just like we're doing here. So you've heard me say often, and it's not just me, the sayings in the market is that the markets are never wrong. And if you see moves in the markets like we're seeing based on the Federal Reserve's discussion points, that is a direct result, and that's going to move markets all across the world. And Bitcoin is now part of the markets. We have institutional adoption. We have banks coming in. We have hedge funds, investment funds, investment managers. We have countries wanting to get involved. So Bitcoin is now becoming and has become an institutional asset. It's very different than the Bitcoin of years past, which was largely retail driven. But 2018, 19, and more specifically 2020, Bitcoin has become an institutional asset, where the large proportion of Bitcoin price action is going to be driven by institutional investors. So that's just kind of where we're at now. It's a different asset. It is not tracking gold. Like a lot of people compare Bitcoin to gold, calling it digital gold. It is an asset, but it's not a store of value. A lot of people, the narrative was that Bitcoin is the ultimate store of value, like digital gold, has all the characteristics that gold does not have, all the advantages that gold does not have. But it's not stable enough to be considered a credible store of value. It's too volatile. A store of value does not move like Bitcoin has been moving. And let's look at gold. Gold has been moving a bit lately, and it's been kind of tapering a bit. But generally, when you're talking about stores of value, you don't have wild swings in it of 20 to 30% in days or weeks. You might get some swings over months and things like that. Gold has been on a little decline here lately, and it's been quite volatile. Again, gold largely responds to the bond markets and to what the Fed is talking about. And what's going on now is, with the Fed's narrative of lower interest rates, that pushes capital into risk assets, the markets, Bitcoin, assets like that. So when the Fed says that we're going to raise interest rates, well, there's better yields in other assets that are a little bit more safer. So it's going to push money out of risk assets, risk on, risk off, and it's going to push it into more stable assets like bonds, treasuries, things like that. There is a lot of money going into corporate debt right now because the yields are higher. So what we're seeing with Bitcoin and what we're seeing with the markets is based on what the Fed said. And remember, there's a lot of news out there when it comes to Bitcoin and the Fed. We went over the markets there. As you can see, the crypto markets, Bitcoin's dancing around that 35,000 level. It's trying to stay above 35,000. We're going into the weekend. It's Friday afternoon, about 4 o'clock on the East Coast. We've got a close coming up in about 4 hours. If we get below 35,000 and close below 35,000, then we're probably in for a big sell-off. And we don't know where that will end. And it just all depends on how people feel about that as the price drops and starts dropping rapidly. If it does, it could very likely bounce. We'll take a look at the chart in a minute and just kind of see where we're at. And, we could very likely see a bounce. You just never know. And that bounce could be significant, or it could just be a trap. And then or just an attempt to get back to resistance levels, and then maybe turn and go down again. So we're not really sure. We'll take a look at the charts in a minute and kind of see what that's all about. And as you can see, the altcoins are down across the board as well. And if you've been watching this, they've been kind of trading back and forth. One day Bitcoin's down, altcoins are up. Next day altcoins are down, Bitcoin's up. But today everything is down all across the board. This is a broad sell-off right now. And again, it's the Fed's comments and the market coming to grips with what the Fed really said. They said, hey, we're taking the foot off the gas. Interest rates are going to go up. We have real inflation. Inflation is not good for the economy. People want to go to cash when you're talking about inflation. So they're going to take profits off the table. And at the end of the day, that's really the message the Fed sent. So remember, I say, don't listen necessarily to what they say, watch what they do. And they haven't done anything yet, but you're starting to see independent people, other central bankers come out and say, hey, we got to raise rates sooner than what the Fed said yesterday. But what the Fed really said, what Powell really said, was he basically told the markets, you've had a great run. It's time to take some profits off the table. Let's go ahead and take some profits and get ready. And we're going to ease into this thing. So that was kind of the hidden message that was sent by the Fed yesterday. So that's what you're seeing now. You're seeing some profit taking. We might see this continue in the next week, maybe throughout the summer, as the market digests the actions that the Fed's going to have to take, and the reality that at some point QE has to stop, bond purchases have to stop, interest rates have to go up, because inflation is going to be much more punitive than taking some profits off the table and reducing liquidity in the markets. So that's the reality that we're facing right now, and some of the issues why Bitcoin is selling off. And other news, there's a lot of positive news for Bitcoin lately in terms of the El Salvador thing, and more of Central American countries wanting to get in on the action and adopt Bitcoin as a legal tender, as an accepted currency in their countries. And again, there's a lot of issues with that. Sounds like good news at first, but it comes with a lot of baggage, a lot of complications, and it's just not a straight up one and done kind of thing. There's going to be a lot of resistance from the world banks, the central banks, because it's such a volatile asset. It can put a country's credit rating in jeopardy. It can put its financial standing in jeopardy. And if it's something that's promoted within a country where a large portion of the population are poor, and they put their savings and their earnings into an asset that drops in value, that can be extremely damaging to the country. So it could straight up wreck the economy. There's a lot of economists debating that. Ultimately, it could be a good thing if it's done correctly. Obviously, anytime you can make it easier to bring money back into the country from family members outside the country, that's a good thing, and it's a positive thing. But that currency right now is the dollar, and it needs to be stable. That's the problem with Bitcoin being used as money. It's just not stable. Even as a store of value, it's just not stable. What Bitcoin is, and this is what we're getting ready to go over in a few minutes, is it's an asset for trade and speculation. That's really what's going on, and that's what it is. And that's why these institutional investors want exposure to Bitcoin, because it's a highly tradable asset that can generate a lot of revenue, a lot of income. And the institutional investors that are getting into the game and that want exposure to Bitcoin, they are doing it for profit. They're not looking at a 10, 15, 20-year horizon. They're looking at the history of Bitcoin, the rapid appreciation, the rapid depreciation, where they can long and short it. They're trading futures, options, and derivatives, financial engineered instruments. They're not trading the asset itself. And that's where the real liquidity, the real money is to be made. And that's why they all want in, because for them, it's unregulated, easy, low-hanging fruit for them to get involved with. The SEC said on Wednesday that a regulatory filing that will seek more public comment on a proposal to list on CBOE global markets. It's not the first time this year that the SEC has delayed giving an answer. So ETFs are coming, but they're not coming this year, maybe next year. But the SEC has delayed ruling on Bitcoin ETF. And crypto traders are really after that. They really want to get into that because they want, institutions want in on it, but they want in on it at a certain price point. Institutions are not going to come in and overpay. They are in the business of making money. The funds that are managing their investments are in the business to make money. So they're not going to come in and just pay exorbitant prices for the asset because they can't make any money. So they have to drive price action. They have to buy low, sell high. That's how they make money. Goldman Sachs is ramping up their Bitcoin trading in a new partnership with Mike Novogratz's Galaxy Digital. So the banks cannot carry this asset on their books. They're not buying it, but they do want to offer trading services, and they need a third party to handle that and to act as the custodian for these assets and give them exposure. And even Goldman Sachs is split. So they came out with a report a couple of weeks ago, and they said Bitcoin is an asset and it's a tradable asset. And now their chief investment officer has come out and said that it's not a recommended tradable asset. So there is some dissension within Goldman Sachs. And I think a lot of this is the covering themselves to make sure that they put all the disclosures out there and let people know, look, this is a volatile asset. It's highly speculative and you can lose your investment. So they have to come out and they have to be sensible about it and advise their clients that this is a volatile asset that could not go well at the end of the day. But there are a lot of investment funds, a lot of banks, a lot of hedge funds that are working their way towards trading Bitcoin and offering the services for their clients. So as more and more institutions get involved with Bitcoin and cryptocurrencies, Grayscale is looking at a lot of different altcoins. They're getting involved and they're going to allocate more and more assets to the space. It's going to help stabilize the price and turn it into a more consistent, stable asset, which ultimately will be a good thing for Bitcoin in terms of driving price action at the end of the day. But first, we have to get through this time. We have to get through the adoption phase, and we have to get through this volatility that we're in right now. As it stands right now, we're at 35.6. And again, we've got to hold that level. If we drop below that 35,000 level, it could go down and test those $30,000 lows. If it breaks that, then we're off to the races down. It could bounce from here and head back up. But there's a lot of resistance and a lot of things going against Bitcoin. So one of the things that a lot of people, some people are talking about, but a lot of people aren't, is this pi cycle top. You can Google that pi cycle top indicator for Bitcoin and read what that's all about. But it's been pretty darn accurate. It's an average. It's a calculation based on a couple of averages. It's been pretty accurate in basically showing the top of every single cycle, bull market cycle that we've been in. That was the current one. It picked the exact top. It's again, it's based on moving averages, so it's not picking anything. It's just kind of these averages are working right at the point of the tops. That is the 2017 peak of the market, pi cycle top. Then you go all the way back to the last one before that, 2014, 2013. 2013 December, pi cycle top right there. So that's been a pretty darn accurate indicator. You heard a lot of talk about the death cross with the moving averages like we discussed the other day. And again, it's a lagging indicator, but you can look at where they cross and how they cross, what happens afterwards, what happens before, and you can, the writing is on the wall with that. And then again, we have this macro head and shoulders that nobody's talking about really. And we're starting to see a well-defined shoulder there. We had the shoulder coming up the mountain. Now we're coming down the mountain. We got the shoulder. So how do you get down the mountain? Sometimes you get down the same way you came up. Oftentimes you can find another path, but most of the time you get down the mountain the way you come up. And a lot of people have talked about the Wyckoff distribution charts. And when you look at those, you can see one. A lot of people are using that accumulation and things. Let me look up Wyckoff distribution right now. So people are trying to debate, are we in accumulation? Are we in distribution? Are we at the top? Are we at the bottom? And I've had some Wyckoff experts on. I've got a couple of more coming on here in the next couple of weeks. So be on the lookout for those. a lot of people think that we're in this reaccumulation phase and then we're going to bounce and we're going to head off to the races here. We've seen this where people are looking at this one again, another accumulation phase where you can bounce up. And then here's one here where you have the distributive top that we just went through. You had the accumulation phase coming up. It's the distributive top where we went into, and then you come back down into that that phase E, which it's starting to look more and more like where we are, which is kind of right here. We had these little bumps coming up the hill. We bounced around at the top. We kind of dropped off. We've got a couple little bounces and coming down that mountain. You can see it right here in real time in some of the markets. This is Apple stock that went through a similar type of thing in the past. And if you go look at historical charts and references of this, and even Google Wyckoff like I just did, and you look for images, you can see some charts of the Wyckoff distribution. Let's look at some images here that are kind of interesting parallels to where we're at right now in terms of how these charts look and where we could possibly be in the cycle right here. And a lot of them are showing this Bitcoin chart as we're coming down. So it's an interesting, here's one right here that kind of shows us going up, coming across the top and coming down. Here's one right here. I don't know what this one was on. That might be the Bitcoin chart. But anyways, whether it's Wyckoff that's happening, which it very well could be because there are a lot of institutional players in the game, that's something that takes a lot of time, a lot of capital to do, and it takes some, serious technical ability. And it's just interesting how this is all playing out, how this peak, a lot of people said we didn't get a blow off top, but that's, we just had a couple up and downs on the way there, but that's clearly a blow off. And this pi cycle top is very interesting. There's a couple of indicators you can look at out there that kind of predict these tops. That death cross is one when you put that on the chart, those moving averages, the 51 and the 200 crossing up, kind of where we're at now. And as the price drops more and more, that cross becomes more and more imminent sooner. If the price goes up, it kind of delays it a little bit. But again, it's a lagging indicator. It's already showing us what we already know. As the price comes down, that 51-day moving average is going to come down, obviously, because the price is coming down. So it's going to bring that closer and closer together. So when you look at it on the hourly, you get a much different look. You see we're trying to bounce now on this hourly. We've been dancing around here. We've had a 35.2. So if we can hold that 35 range, we've got that resistance. We're wicking down right to 35.1. If we hold that, we'll be okay here for a little bit, might bounce around. But the weekends, you just never know what can happen. The last couple of weekends have been kind of mild. We haven't had any huge moves over the weekends, but sometimes weekends can be a little volatile. Again, I have Gareth Soloway coming on Monday. We're going to talk about how the institutions are trading the markets, what they're doing, how they use futures, options, derivatives, and things like that. The CME gaps, we'll talk about those types of things and what that means for the market. And I'm sure we'll have something to talk about by Monday. We may have some big moves. I'll be checking in over the weekend, making a couple of videos on some price action. But again, you got to be prepared for all events, and I wouldn't bank on an upside until we get above that 40,000 range. That's kind of my bucket. When we break that little ceiling, we could not get above it the other day. And when I say break the ranges, I'm talking about closing. And somebody did ask this question. So the cryptocurrency markets are 24/7, 7 days a week, 24 hours a day that you can trade them, but they do close every single day and open at 8 p.m. Eastern Standard Time, because you need to have the ability to track. So you have to have an opening and a close, even if you're trading 24/7. So that happens at 8 p.m. Eastern Standard Time every day. So when you hear people talk about closing timeframes, that's what they're referring to. And that's what we need to do. If we close above 35, we'll be in good shape. And we should be able to hold that. If we close below that, then we'll start breaking down. And that could be a significant move to the downside, just to kind of test the market and see what kind of support we have. I know there's a lot of support at 30. There's a bunch of support at 20. And you start getting below 20, you'll see a lot of people jumping in, and the price will rebound and potentially move up pretty quickly. So you want to be prepared for that. If we do get a bounce here, it could bounce up into that 30, 40, 45,000 range, bounce around, and then you could be off to the races, or it could get rejected and then test back down again. But nobody knows the charts. All they can tell you is what's happened, give you an indication of what's going on. If you're trading ranges, it's a great range to be trading in. A lot of movement in this price. But it's tricky. You got to know what you're doing. You definitely don't want to be leveraged if you don't know what you're doing. And that's one of the big things that we've taken out of the market here is leverage. When you go back over and you look at markets this year and the relationship between the liquidity that was pumped into the market from the March low of 2020 to now. If you look at that Dow Jones and the S&P and NASDAQ, if you look at them all over the last year, everything is pretty much straight up. That's the S&P right there. Let's look at the Dow Jones. If you go back and look at the last year, straight up pretty much. Of course, these markets are a little bigger, so they move a little bit slower, but still, it's basically been straight up for a year. And you could go look at any major market since March, and it's been off to the races. Bitcoin's a little bit different. Bitcoin was more very parabolic and more straight up. But again, we had that low back in March of 3,800. We had a high of about 65,000. And then prior to that, Bitcoin had a high of $20,000, basically 19,000 and change. And that was in December, looks like, of 2017. Then we had some immediate rejection of that, and we got back up to about 14,000. And we were kind of, after that big sell-off in 2017, 2018, July 2019, we're in that 13, 14,000 range. And then we're kind of bouncing around, just ranging there, kind of almost like where we're at now. I mean, there's some big ranges here. Obviously, we're at 13.9 in June of 2019. And we kind of bounced around, extremely volatile, dropped all the way down to about 9,000. Okay, so we dropped from 14,000 down to 9,000, back up to about 12,000. So these are great trading ranges, a lot going on here. Then we had a little drop off here. We're getting into September of 2019, ranging back up to 10,000, had a little drop back down to 6, bounced around down there for a little while, then that 6,000 to 7,000 range. Kind of, if you look at this right here, kind of looks a lot like where we are right now. So this could lead you to believe that, we're bouncing around just like this, and then you can see how this bounced. And this, I believe, was on its way up right here. This is that December time frame of 2020. Then we rebounded. We were into that September time frame, or February time frame, I'm sorry, of 2020, of about 10,000, 10,500. I feel like that's where our bull market really began. We had the pandemic hit, which kind of took the wind out of everybody's sails until the Fed stepped back in. And you can see that was just instant, back off to the races when the Fed stepped in. Pretty much unencumbered rise to the top. We had a little bit of sideways action here for about, from June, for, pretty much the month of June, we were kind of riding sideways there. And again, you could kind of look at this and compare these timeframes to where we are now. So it's very possible you can be downtrending. This was in an uptrending market, and we kind of bounced sideways here for a little while, and then ultimately went off to the races. And that's kind of what you got to look at. Same thing here. We're up, bouncing around, then we're going up. Same thing here. We're kind of bouncing around. You get those little sideways jaunts in an uptrending market, but the key is you get them in the downtrending markets too. So a lot of times when you're bouncing around sideways, you got to look at the overall trend of the market. And if it's a downtrending market, then a lot of times the moves off those sideways actions are in the direction of the overall trend until that trend is broken. And how do you know the trend is broken? It has to close above the last high or low of that cycle. So our last high before the downtrending cycle, 59,000. So until we close above 59,000, we're not out of the woods of a downtrending market. That's your last lowest high after the all-time high. An all-time high in the 63, 64,000 range. And then after that, your last lower high from that point was 59,000. So until we get back above that, we're not off to the races back into a bull market again. We're still in a downtrending market overall. So these moves have to lead you to believe that it's going to continue trending down until we find a bottom. We have not retested 30,000. And until you do, you can't call that a bottom. I know a lot of people say we've already bottomed at 30,000. The only way to know that is you can't wick down there. You have to run down there and test it. Now, could be that 33, we've got some resistance there. Could be that that's your bottom. So if we continue to test this and bounce off of it, then we could find a bottom at 33. If we break through, the next level is the 30. And then if you break through the 30, then I think you're down into the 20,000 range, 15, 20,000 range to find a bottom ultimately. So that is Bitcoin. That's what we need to do. We've got to get some higher closes in order to confirm up. We've got to break these resistance levels of the first resistance level again is 40. Then you get up to that 43. You've got 46, you've got 50, 56, and then ultimately 59. And once you close above 59, we should be in the clear for a while and back onto that path to 100,000 that everybody's looking for. But until then, check out the Pi cycle top indicator. It has been pretty accurate and calling market cycle tops. So you can just go back and look at the charts and, decide for yourself what that looks like. Take a look at Bitcoin and how it compares to traditional markets over the last year to 18 months since that March downtrend, since the March sell-off, and you'll see a lot of similarities there. And, macro news makes a difference, right? So the one thing to think about the news, okay, so there's a lot of ways to look at, what's going on with news cycles out there regarding Bitcoin and cryptocurrencies. A lot of people say, don't pay attention to news, don't pay attention to the FUD. Remember, rule number one, don't lose money. Rule number two, remember rule number one. So don't lose money means preservation of capital. So if you're investing in anything, it's your job to preserve that capital. You don't want to lose your basis. If you don't make any money, whatever, that doesn't matter, but you don't want to reduce your basis. You don't want to lose money because after tax, with the money that you've invested, it takes you 2 to 3 times the amount to make up for that. Then you lose all the time. So you lose the time velocity value of that investment. So you don't want to go down that road. It's much harder to hang on to it than it is to make it. So preservation of capital is extremely important and critical. So you have to think about that. So when you see news, some of it's going to be meant to drive price action in the markets. That's just how it is in traditional markets. Now, Bitcoin is becoming more mainstream as it becomes a more mainstream asset, and some of the other altcoins become more mainstream assets to invest in. News is going to be created that's going to move the price action. Some of it's going to be straight up false. Some of it's going to be real. Some of it's going to be rumors. So what is the saying in the market? Buy on the rumor, sell on the news. So pay attention to the news. If you want to increase your holdings, whether you're long-term or whatever, you always want to add to your holdings, increase your holdings. So you want to buy on the rumor, sell on the news is exactly what you want to do. Think about what we're seeing with the Fed action the other day. There was all kinds of rumors about the Fed. It's a good time to buy. And what's everybody doing? They're selling on the news. What's the news? They said they were going to raise interest rates by 2023. Some of them are coming out saying 2022. Everybody knows that it's going to be sooner than that. We know that the bond market and the yields in the bond market are going to create tapering. We know that inflation is going to create tapering, and we know that rates are going to have to rise. So the markets are starting to see this. They're pricing this in, and you're going to see it start to reduce and deflate a little bit here as we go through the end of this year. And we're seeing the same thing now in Bitcoin and the altcoins because they are very directly correlated to the other markets because it's the same investors in those that's in traditional markets coming into it as Bitcoin becomes more adopted and more mainstream. So just a few things to think about on this Friday afternoon. And for me on the East Coast, it's Friday afternoon. And I will keep track of the news and Bitcoin and the price action over the weekend and make a couple of short videos for you. Until then, I will see you on the next video.